Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your feedback and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
All right, good morning, guys. Welcome back to another live stream. Got a very busy morning here, busy start. I got 2 trades that I just entered into and gonna have to do all of that here live. So let me get that set up here for you guys. I just shared my screen. There we go. Thank you, Chandler, for that. Okay, so I'm re-entering my oil trade, and I'm gonna have to kind of act quickly here. I've got 2 trade alerts that I have to send out right off the bat. So bear with me here. As we get started, it's a relatively quiet day here in terms of market volatility, but let me go ahead and rejoin my oil trade here. So I'm putting a stop loss here below the lows. That's going to be a 1% risk on USO. So let me go ahead and set this up. Okay. 1% risk here, distance wise, right? And okay, so rejoining the US oil trade, but I've also got a gold trade that I actually wanted to take here this morning. So let me I'm gonna be kind of less talky, more setups here real quick, and then I'll come back and talk about it. Okay, let me go ahead and rejoin the oil trade. You might be asking, why'd you do this right at the beginning of stream? It's because the market just opened. So bear with me. And what I mean by that is the US open. US market just opened. So let me get this set up. Okay, so entry 76. Just copy this in. 76.10. Stop loss on this one is 75.31. Okay. All right. Take that screenshot there. All right, members inside of the VIP group, I'm just entering into my analysis, updates, trailing stops, any adjustments that I make to the position, I will do so inside of the VIP room. This just got shared here. That's the oil trade. Now I got to do the gold trade that I just joined as well. All right. Okay. And again, in a moment, I will go through the explanations, the breakdowns here. But real quick, I just want to get these orders out. Okay, let's do this. And for people who are just joining, I do have some trades that I'm taking right now. I just need to kind of get them out, and then I will discuss in more detail with you guys here. So just give me 1 second. All right. So went long on gold here. break this down here. Okay, so entry 2026. Stop loss 2011. Let me please also transparently say, please don't copy this. If you copied my last trade, you probably would have lost money on oil. So please know I am not perfect. I take losses just like every other trader, and you should not copy my trades just because you see me take a position. You should understand why you're taking it. You should have your own trading strategy. If you agree and you take a trade in the same direction, hey, that's on you. That's your decision. But please don't copy somebody on any social media. It is a bad thing because you don't know what the strategy is. You don't have full context to why the trade is taken, how much size am I taking relative to my account, all those good things. Let me go ahead and also set up my position here. I need to set a stop loss here. So on my GLD position, which is where I actually can take this trade, by the way, there's a broker description. Actually, Chandler, if you don't mind dropping the WeBull link for anybody who would like to trade with the same broker as I am using currently. This is what I use. It's WeBull. It's fantastic brokerage. I've never had any issues, and I really, really like the execution and the fact that they can trade directly on TradingView is remarkable. Why does it say I already have sell positions? So sell stop 186.31. I want to sell 234 units. Send order. Existing sell orders of GLD. Hold on. Let me figure that out. Orders. Sell stop 180. Oh, let me just cancel this. I had another GLD. Cancel that order. Send it again. Okay, canceled. Send that. There we go. Same thing with US oil. I need to do a 1% distance stop loss here. So 1% is going to put me at, it's going to put me at 70.79. So let me go ahead and do that. Sell 2.2, stop. Good till canceled order. We're going to go ahead and sell stop that. Okay. GLD, I need to get the ETF variation numbers into the Discord. And this is not a day trade, guys, so let me just be clear. Like, I am trying to get this out as speedy as possible, but it's not a make or break, instant execution or bust kind of strategy. What I'm doing here, this is my first attempt on gold. This is my third attempt on oil. So again, I've had it wrong on oil a few times here. So this is another attempt that I'm taking. 186.31. Okay. On GLD, we're good there. COT data, very bullish. I'm doing my write-up here inside of the VIP room on gold and hovering just around a bullish signal on the edge finder. Price action looks decent, though still in a range on the daily chart. Looks decent on the 4-hour chart, though still in a range on the daily chart. Hence why my initial position here is small. Any rate cut possibilities, any rate cut expectations coming sooner, or geopolitical situations could spike the price of gold from where I believe is a relatively oversold area. Okay. Gold is out. Oil is out. Got two positions here. Oh, let me adjust this. Fix this. GLD, sold GLD. And let me also go ahead and make sure US oil, I think I have the wrong ETF variations. So let me go ahead and pull that up. All right, ETF variations, we have 71.52 was my entry. And my stop loss is at 70.78. Okay, thank you guys for bearing with me, and I apologize for the delay to people who are regular stream viewers who don't necessarily love watching me execute positions. Thank you for waiting on me there. I do have two commodities trades, and now what I'd like to go ahead and do is we'll go to the all market screen so that we can watch this kind of context-wise together. So let's switch over. I'm going to switch to my all markets page, and we can get a look together at what the market as a whole is doing here today. And we can discuss a little bit, why is Nick so bullish commodities this morning? Did I just wake up and decide I wanted to go buy some barrels of oil and gold bullion? Yes, kind of, but let's talk about it. Okay, so in terms of indices right now, we do have price spiking, US 30, NASDAQ, SPX spiking, but still below last week's all-time highs. NASDAQ, US 30 leading the charge, it seems, actually. Is that the top performer today? Not quite, but very close. If you see that continued price action, that actually could take over as the top performing index here today. But I do have a position heavily on indices. I'm sorry, on commodities this morning. I just went long gold on this pullback, and I went long oil on this pullback. And I'll discuss that in just a moment's time. Let me also just mention, I just showed off the Discord channel. If you guys would like to join the Discord channel, I'm going to be giving something away on there in just a second. But first, let's just get you to join. If you join the Discord, we're going to be dropping away some giveaway stuff here. If you could drop the link here, Chandler, for us. Anybody who would like to join the Discord, we're going to send the direct link to Discord for people who would like to join us in the action. So click that link. Should be in the chat now. Come join us. I'll do a giveaway in just a minute. But again, you got to be in the Discord to get in there. So let's go through some stuff. I want to show you guys the COT data really quick. The commitment of traders data came out, and it was kind of a commodity sweep. Okay, this was part of the reason why I like the idea. Look at this, guys. Check this out. Silver, that's a commodity. I already have a silver long position. Platinum, gold, US oil. So all of the major commodities that we track on the Edge Finder are all bullish in terms of commitment of traders movements. So big money seems to have kind of picked up a long position on gold. Let's go through gold here really quick. So you may notice right off the bat, Nick, they closed out of long contracts. Isn't that bearish? Yes, but look what they did with short contracts. They closed out of way more short contracts. What is this telling you? What does this combination tell you? If you think about a trader, let's think about one trader. Let's imagine that this is just Mr. Banker, okay? Mr. Banker, he has a bunch of longs and shorts on gold. Let's assume that he has both open, and he closes some of his longs, a little bit of his longs, but he closes a ton of his shorts. What's the net outcome in that scenario? Its net outcome is bullish. The Edge Finder will interpret that for you based on the calculations that it's got behind the scenes. So it's taking all these numbers and it's factoring in that Mr. Banker overall, the average hedge fund, the average overall performance, they moved more into gold. Okay. At the same time, what did Mr. Banker do on oil? Oil increased longs, decreased shorts. That's just strongly bullish, right? An increase overall of 1.86. So both of those, I do have positions on here this morning. We'll see how those play out. If I do get stopped out, I do have plans to re-enter. I have secondary and third entries on gold. I also have, well, oil, we'll see how that one goes. I've already taken 2 attempts before this, so this might be my last try on oil, but we'll see how it goes. So yeah, and then on the flip side, you have things like US 30, NASDAQ, SPX. All 3 of the major US indices got sold by the commitment of traders data. So this has me very much positioned this week, and maybe I'll be right about this, maybe I'll be wrong about this, but this has me positioned where I think indices could actually see a little bit of pullback here coming. And at the same time, I think we could see commodities like oil and gold do okay this week. So I'm moving a little bit heavier into the commodity side this week. We'll see if I'm right about that. I do, of course, still have my options positions on the indices. I've sold puts on several ETFs that I like. So ideally, the stock market still goes up and my commodities go up, but I'm heavier positioned this week on commodities. We'll see how that plays out. I mentioned that I would give something away inside of the Discord channel. A bunch of you guys just joined. Let's drop that link one more time for anybody who would like to join last second. I'm going to do something really quick. We did this on Friday, but in case you missed it, message my good friend Emily. Oh, she's going to do it. Maybe she's going to do it for our free course today only. All right. For everybody who just joined, do me a favor. Send my friend Emily a message. Emily's someone on our support staff, and she'll be handing out anybody who just joined the Discord access to our free course. Let me also mention that if you would like an Edge Finder trial, you can also message her. There's your little Easter egg here today, guys. Send Emily a message. She's standing by. She's in the other room. She's right outside that way. She's got her desk set up and she's waiting for you to message her. So if you would like some help with getting access to our free course, or you would like access to the Edge Finder trial, send her a DM here this morning. She'll get you hooked up. Again, she's standing by. She's ready to help traders who would like to grab access. And that is genuinely, I'm speaking candidly, no gimmicks. If you want access to our free course, she's got it on standby ready for you. Just DM her. She's got her text pre-written for you to message her so she can take advantage of helping you out here this morning. And again, a big thank you to everybody who joins our Discord, watches our live stream, supports our content. We do genuinely appreciate it, and we do our best. Obviously, we are a business and we're trying to make money, but at the same time, we genuinely are trying to make money in a way that we think is the best way possible, which is to help traders as much as we can for free, and then also offer opt-in purchasing things like the Edge Finder, that sort of thing. If you sign up with a brokerage under our profiles, then of course that also helps, that sort of thing. So we are still a business. Don't let me act like, we're just a saint by any means, but the course genuinely is free. Just shoot Emily a message to help you out. So again, let's take a look at gold. Gold trying to bounce here. Oil, also perhaps we'll see if this is the low. We're kind of sitting at a support level. I want to go back here to our single market. In just a second, we're gonna broaden the conversation with our good friend Frank, see what he's got on the subject. I'd be curious to see what he thinks about commodities going into this week, if he's as bullish or less bullish than me. Here's a quick look at gold. So my thought process on gold is, we've been seeing this nice upward channel on the 4-hour chart. Though admittedly, and I've said this time and time again, so let me not just change my tone completely. I've mentioned that the daily chart has been a little choppy. It's been a little rough for me to trade, but this 4-hour chart seems to be moving nicely. And the COT data came out pretty strong. I took a relatively smaller sized position, but I think we could trade up to this region, and maybe we have the legs to get us to break out here. But we'll see. Again, that would kind of be dependent on market data. We have PCE later on this week, et cetera. So we'll talk all about that. We'll try and get prepped here with Frank. We'll bring him in here in just a moment. Real quick, before we do that, we'll thank our sponsors who make these shows possible. A shout out to Eightcap. And then right after that, we'll be back with Frank. Check this out.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, we're back with Frank. Hey Frank, how's it going?
I'm good. How are you?
I'm good. Hey Frank, you gotta turn that light on in front of you. Somebody commented on the video there like Frank looks like he's in the dark. Yeah, I think you have that light in front of you.
I usually probably, and I'll turn it on, but maybe you'll see what why I don't usually do it is they shut off immediately.
Oh, do they? They run out. Maybe we
So
got to
this
get
one
that
looks like
sorted
it's all
out.
right. But
Well,
yeah,
you know what, Frank?
that's what I
Really
do.
great.
I work in the dark and trade in the dark only. That's the only way to trade.
You know how I trade, Frank, is what I do is I turn the screen off and it makes me a better trader.
You put a blindfold on and flip a coin.
I spin around 3 times, close my eyes and pray, and then I hit buy. Just kidding. Frank, I got long commodities pretty heavy this morning. What do you think about that? I saw it in the COT report. I also kind of have a little bit of queasiness with the indices right now. I think that they might be a little bit overextended, though I've been saying that for some time. So I sound like an idiot at this point. But I'm waiting for a pullback in the indices. In the meantime, I think I like oil. I've been beaten up a little bit by it, but I'm trying again at this level. We'll see how it plays out. What do you think about oil, gold, etc.?
So I am currently long oil too. This was
Nice.
from last week.
Mhm.
But in terms of PMI, we're looking at gold right now and oil in a second. So PMI measures contraction or expansion based on like a survey of just purchasing managers.
Yep.
And typically, higher PMI data represents expansion. So anything above 50 is expansion, or any increase in PMI suggests that we're working towards an expansionary market, I guess. So typically, that also negatively affects gold if you
Mhm.
see higher expansion overall and like broadly in the market.
Yep.
So I would be guessing that higher PMI is not going to be um, is actually going to be good for gold, but possibly bad for oil's price. However, I do have a question about China because we're also looking at China's economy to sort of rebound and pick up the pace on production and maybe show some increase in demand for such things like oil or gold as well. So um, would a higher PMI in China and a lower PMI in, let's say, US would be a bullish sign for gold? Or are we looking for lower PMIs across the board for gold?
Yeah, so it's interesting because the relationship is similar but not exactly the same. But you asked a really good question because China PMI data comes out this week, and the question is, if you get a stronger Chinese economy, let's just assume for a second that we see improvement, we see some rebound in China. What does that do to oil? What does that do to gold? Well, oil, I think it's more obvious of the two. It would be considered bullish for oil because again, if you get a strong Chinese economy, they demand a huge amount of Brent crude oil. Obviously, they do a massive amount of shipping, they do a massive amount of transportation. There's like a quadrillion people over there, so obviously they're a huge demander of raw materials, and that includes oil. Gold, I would say, let's come back to gold for a second. Let's ask first what it would do to silver and copper, which are more considered the industrial metals, right? These, if they're going to start mass producing solar panels, batteries, planes, trains, cars, whatever it is, right? If they are producing a ton more, they're using gold, but primarily they're going to use the industrial metals like copper and silver. So, I listen to a lot of CNBC, and there's one guy on there who has a pretty sizable position on copper, with the idea that if China reopens it, that's potentially a something that could benefit in price. Same thing with oil. I would say is that if you get a China reopening, oil could go higher. Now coming back to gold, I think that it doesn't necessarily have a really strong bullish or bearish perspective, because you could say, well, the raw materials demand is going to go up. Doesn't that make gold go up? Well, yes, but at the same time, strong economies are not necessarily very bullish for gold, right? Because if you get China reopening and outlook is good for the coming decade, all of a sudden, if China's going well and the US is doing okay and Europe kind of comes back online, that's not an environment where gold thrives and leads the entire charge. In fact, you could argue that economic concerns are actually more bullish for gold overall. And so you could kind of get a mixed picture out of gold. So I do think that with China, it does somewhat impact it, but it's not nearly as impactful as like something like silver or oil, something that is more directly, in demand if the Chinese economy is online. Um,
Okay.
Hopefully that kind of answers that question. That's my best guess. It's not a perfect science. It could, China coming online could be mixed for gold, could be bullish for gold. It kind of depends what happens. But good question regardless.
Yeah, so I was just wondering in gold's case, but I guess it's easier to look at oil and make that sort of bias because you want to see demand rise anyways. So any sort of sign of expansion in either country and either economy is going to be good for oil, which is kind of a more clear cut view for me, which is why I'm long oil. Plus
Mm.
COT, I didn't predict it, but I'm happy to see that they're buying this week as well. So
Yeah, and just before you came on, Frank, you pointed out oil. What I noticed is that pretty much all the commodities that we track within the Edge Finder, all four were like really bullish this week. Everything from oil, gold, platinum, and silver. And although we don't really trade platinum, it's still worth mentioning that generally commodities got bought by institutional money this week, which I thought was a really interesting signal. We always talk about the COT report kind of as a collective, which I think is beneficial on the shows. You can look at one particular asset, but sometimes it's nice to look at certain baskets like risk on assets or risk off assets or commodities or indices, et cetera. It's nice to break it down in that way, I think.
we'll also take a look at the 10-year bond. They're
Mm.
selling the number of short contracts is so much bigger than long contracts. But I mean, this week's change was hardly anything in terms of
Yeah.
percent net change. But looking at that really suggests, you know, they're expecting lower yields
Mm.
with this
Yeah.
sort of number is what I would guess. So that's also good for oil, but also the indices. If you've been looking at that at all, I have not been checking out NAS lately, but it's still pretty high, I would imagine.
Yep. Would be interesting to see what happens this week after this kind of sell in the COT report. Hey, Ivan, how's it going, man?
Good.
Ivan, we've got to come to you now because we've been chatting a little bit about the COT report, talking about commodities. I
hmm
want to get your thoughts on,
hmm
last week we discussed oil together a little bit.
hmm
What do you think
hmm
about commodities, whether it be gold, silver, oil? What are your thoughts here right now?
I see overall range. I don't see clear drivers of why oil will go higher or lower. To me, I don't know. I don't know. I want to see OPEC come out and say they want to cut something, but I'm also surprised that it doesn't go higher because of higher than expected inflation in America. But yeah, disappointed. Is that the word?
Yeah, and I think you mentioned inflation out of the U.S. We have PCE numbers this week. Should be interesting to the commodities world. And yeah, if you see higher than expected inflation this week, what does that do to
Mhm.
oil, Ivan? Do you think it is bullish, bearish? That's your quiz question.
That is like the best curveball I've ever been given by you. Inflation and oil is very closely linked, especially in America, because oil goes into every part of the society and
Mhm.
economy. So higher oil is higher inflation. Higher inflation is higher oil.
Yeah, that's fair, and it makes sense. If you think about the equation, right? It's very simple. If the cost of commodities is higher, that gets passed on in every component of the supply chain. Ivan, on the currency side, you watching the yen? You watching the dollar? What's on Ivan watch list today?
I'm looking for. Well, the thing is, dollar CAD. I'm not an expert in dollar CAD, but it's showing potential. of higher prices, though it's a range. But so we can just, because it's a higher high today and now a higher low that I missed. But interest rate, inflation differentials. CAD came out at 2.9, and America still has around 3.1, but still they are in different directions, and CAD might be cutting, and dollar might be standing higher. So this one should go in that perspective, going higher, hopefully. Cross fingers.
Yeah. So you're watching dollar CAD this week. Any other dollar crosses that are on your watch list? Euro dollar at all?
Yeah. The thing is, it made a new high. And then I would question myself, are we going to go high? But for me to be interested, I just need to see a new lower low below 108. And then I'm more excited again. So I become very mute and like, I don't care if I don't see lower lows and lower highs in continuation of it, because this was supposed to be the ultimate move lower and then continuation lower, and then we didn't get that this morning. So I'm like, boo.
Yeah, I think with oil, with the euro against the dollar specifically, this chart's been pretty indecisive in the last few weeks. I'm curious to see if PCE this week will give us a little bit more decisiveness. Dollar pairs, other ones have been more decisive. I mean, here's dollar yen. This one's trending a lot cleaner. We talked about this last week and pointed out this level of resistance. If this breaks out, this could be interesting. You might see something like this. And the thing, Ivan, I want to ask you about this. The yen is like this ginormous, untamable dragon. Like a lot of times it just trends in one direction so much further than people expect. It's similar to the NASDAQ. The NASDAQ does the same thing. It has this like capability to just blow expectations out of the water. Do you have any opinion specifically on the yen? Not necessarily just dollar yen, but just in general. Do you have any thoughts on the yen right now?
I got punked. I was expecting yen big bullishness in 2024. And that kind of hurts me. I can see some trading plans from previously. Like I tried to look for some sells somewhere and didn't work out. Well, it went to target, but it didn't continue down. And now I look like a lunatic. It's because the change in monetary policy didn't come because inflation didn't go higher as expected. So it's kind of like it's higher for longer. Also, euro yen, dollar yen, also yen. Given the current situation with the Bank of Japan, though they have CPI tomorrow, it's like yen is likely to continue weakening, meaning these prices are likely to go higher. And if you are like sitting really back 2020 from 114 and now at 163 in 4 years, that is so. It's a trade I never took.
Yeah, well, it's been surprising to me and to many others is this yen movement, because I listened at the turn of the year. I did a Eightcap webinar, and one of my long-term sort of people I look up to in the industry, Kathy Lean, she did a wonderful presentation on the state of currencies. She mentioned that the yen this year will be very interesting to watch. And she did mention, to her credit, that perhaps it's like more towards the second half of the year when rate cuts really start to come into the picture that the yen could become very strong. I, of course, like you, I think I was a little bit too early in thinking the yen strength could come sooner than that, but perhaps she'll be more right. Perhaps that yen strength could be coming sort of in the second half of the year once rate cuts become more of a reality, or if they become more of a reality. There's the possibility we don't see rate cuts this year, but consensus is kind of that we're going to see cuts, that the dollar may lose some of its steam here, and it should be interesting to see how that plays out. But I want to go ahead and we'll let Frank go here. We got Chris on the other side. I don't want to keep him waiting any longer. So Frank, thanks for coming on, and we'll see you back in the next one.
Sounds good. See you.
All right. See you. All right, we'll bring in Chris from, of course, his own channel. He's sharing his content. We'll say hey to Chris. Hey, Chris, how's it going, man?
It's going great. How are you guys doing today?
Doing good, doing good.
Good.
Ivan, this is Chris. Chris, this is Ivan. You guys both are regular contributors to the show here. Ivan primarily does FX. Chris does a good combination of just about everything. And so between the three of us, I figured we could chat for a few minutes and then kind of give Chris the floor here. Chris, we were talking about the yen. Before we go off onto indices, which I know we got to talk about a little bit, what are your thoughts on the yen? Do you have any opinions about the Japanese yen currency pairs, or not really?
Well, I think everyone's been watching the yen. Everyone's been waiting and wondering, when the yen's going to get stronger. I think the hard part right now is we're really testing the waters of how the carry trade is the most powerful thing right now in Forex. I think that the yen just can't really get a bid. If it gets stronger, it's a one-off where it maybe lasts a couple of days and then gets, weak right again, or right away again. So that's the hard part. Is here's my thoughts. Stay with your alignments. I just deployed a robot last week, full auto trend robot that I built, and I'm letting it go full auto on these yen crosses because I don't want to miss the move. I think that when we do have a carry trade unravel, the yen will be incredibly strong, and there's a ton of rebalancing that needs to happen. But as I look at every yen cross, I mean, technically it's like you want to sell, you want to sell, you want to sell, but you don't have confirmation to sell. Everything right now shows a weaker yen. I mean, I just think major levels have to break for me to confirm that the yen is weak, or I'm sorry, the yen is going to get stronger. So if I'm looking at, I mean, you're looking at U.S. oil right now. If we pull up, any yen cross, I looked at the Edge Finder this morning. CAD yen was one of the top setups for strength. I mean, dollar yen is sitting at 150.73. The 152 highs aren't that far away. We all know here that how many stop losses are sitting at 152 on the dollar yen? Probably tons.
Yeah, that's a really good point. There's a lot,
Right.
a lot waiting and just above these current levels. And yeah, I mean, I want to ask, and I want to bring in Ivan because I knew we could get into this conversation pretty quick with the carry trade, which has been an interesting topic that we've discussed on this channel, many times. Ivan, you've used the Edge Finder, of course, for a while as well. You sometimes pull up the carry trade indicator and look at that stuff. But I'm curious, what carry trade are you most interested in? I know Chris is, but I want to see what you say before he mentions kind of what his favorite couple pairs are.
Also, I don't get. Also, you have to. Well, also dollar yen, New Zealand yen. Any country that is in the forest of interest rates are good to me. And now that New Zealand rebounded in inflation, going forward, that might be my favorite going forward.
So Kiwi yen specifically, or is it Kiwi Swiss? I know a lot of people like to trade the Swiss pairs and the yen pairs for that positive carry that you can generate throughout.
Yeah, now interest rate in particular, it's against the yen. Swiss still has 175, but they are probably going to cut at some point since they have so low inflation now. But I'm still going to stick with the dollar yen, New Zealand yen, because I've been burned too many times on the Swissy.
Fair enough. And that's the thing with the carry trade is, the carry trade, for people who aren't too familiar, it's just the idea of buying a currency that yields a higher interest rate relative to a currency that yields a very low interest rate. An example of low interest rate would be the yen and the Swiss franc, which is why we're talking so much about those two. Those are generally good borrowing currencies. In the last couple of decades, it's been kind of the case where people will borrow from those currencies, they'll sell those currencies essentially and buy something else. And on various brokerages, you can collect a positive swap or a positive carry for holding them long. Like a classic example is dollar yen, dollar Swiss. For a while, I really liked the euro dollar trade there. There was a pretty good swap that you could collect just holding euro dollar short. I don't believe it's the same right now. I have to check. But the at some point when the interest rates become kind of diverged, that's where the carry trade can really exist. Chris, you watch things like dollar Swiss, euro Swiss, etc. for the carry trade. Is that right?
I do. Since 2023, I have been playing the carry trade against the Swiss. Dollar cost averaging in. I have entire class dedicated around it, where if I check and see where we're at right now, I'll log into this OANDA platform. We were sitting up last week around 400 pips total on, I'm trading all pairs against the Swiss except for the Swiss yen. That one's really negligible. The Swiss yen is kind of risk off, risk off. I don't think the technicals really cooperate the way I want. So Aussie Swiss, Euro Swiss, CAD Swiss, Pound Swiss, New Zealand Swiss, Dollar Swiss, positive swap on all of those. And directionally, I've been looking at, I mean, from the technical side and the weekly charts, the monthly charts, we're trading at all-time lows on some. We're trading at, flash crash lows on some. So I've been long and just kind of leveling in. And now it's finally started to turn the corner where I'm looking to add to those positions. So to me, it's been a 1 year plus trade in the making. But when it's all said and done, I'll probably clear 20 to 25,000 pips in those positions. So it's a labor of love, but I think it's going to be really profitable.
That's remarkable. And Chris, I think I interviewed you maybe a year ago, maybe a year plus ago. We sat down, we did an interview on my channel, and you discussed kind of the strategy that you've been using and very consistently over time. Like the Euro Swiss, right? So this thing, as you mentioned, had come down real hard. It's rebounded significantly, but the whole time collecting positive swaps. So very interesting play there, and long term, to say the least. I mean, that's by no means a short term trade. Would you call that a trade, or would you call it an investment? What would you call that?
I call it an investment. Yeah, I mean that's what I launched this course called Portfolio Builder because I am just setting aside money to invest in these positions because I think it's enough to double my account. So for me, Euro Swiss target for me minimum is 1.00. I think Euro Swiss gets back to parity. If we're looking at the technicals, and if you want to go to like the weekly or monthly chart, if we get back to parity, we could also form a major bottom formation, which could also stretch us up into like there's a big pocket that I see at like 103. We could get back to a missed yearly pivot at 105. But like I said, step one for me is let's hold this thing, enjoy some positive swaps, see that we're finally going to put in a bottom. We have our first major high from January 2023, right above parity at 1.01. That's a great take profit as is. If we go higher than that, I would just measure it based on symmetry. We have pullbacks, all sorts of stuff. I'd still look at the charts. So what's nice about a trade like this is I just spot check it, right? Like I spot check it once a week. I check on levels. I've got big chart alarms set hundreds of pips away. So there's not a ton that I have to do other than be patient. And that I will say this, I've done carry trades for over a decade, and they don't set up like this very often. I've had to be pretty committed. I was very frustrated and annoyed in 2022 because we started to see that we had central banks raising rates, and we saw that there should be some tightening going on. There should be differentials in the market, and the carry trade should be happening. But the carry trade, interestingly enough, didn't affect a retail trader until January of 2023. So I sat for months and months and months of negative swap, even though central banks were raising rates, and I was really annoyed and really frustrated. But like literally day one of trading 2023, starting to see positive swap, I'm like, okay, we're back in action. That this swap will take care of like the annoyance that I had in 2022. But I'm looking at a position right now, so I'm up about 400 pips on this basket that I'm talking about. With, like I said, I mean, I'm looking at probably 20,000 pips of profit when it's all said and done. So Euro Swiss is just one of them. Parity would give me, I'm trying to think how many positions I'm in on Euro Swiss. Let's just say I'm in 10 positions because I probably am. I would probably get 5,000 pips alone on just the Euro Swiss. All we have to do is get back to parity. So so look at the chart. I mean, you see the upside there, and if you just draw a trend line and we break that, that's finally the bulls grabbing permission to run, to have room to take out that high.
Yep.
So we're close,
and that's the
right?
thing is, this is I like to ask you about these trades that you're in, these longer term positions, because I think that it goes outside of the box of what most traders are trying to do, right? Most traders are trying to be super short term, quick in and out of the markets. And, I know Ivan and I, we talk about fundamentals consistently. I know you do too as well, Chris. They don't always orient themselves towards super low time frame trading. Ivan, I want to ask you about this because somebody asked me on my Instagram, and I thought it might be a good question to ask you as well. Somebody asked me, Nick, why don't you scalp? Why don't you get really low time frame with your trading? And my thought process was, fundamentals are not really super oriented towards the really low time frames. They might have intraday catalysts. You know, if NFP comes out real hot, it's going to move the dollar suddenly. But what do you think in terms of your time frame? Why have you really honed in on the 4-hour chart, the 1-day chart, that kind of range where you trade? Why those specific time frames?
Statistics. Where well I talk a lot about in my teaching about what fits your personality. I get really stressed, unfunctionally. I become an unfunctional human being when I scalp. So the stress takes over my life. Secondly, I have to trade way more, to have way more stop losses, have way more trades to be acquiring the same amount of pips that I do with longer time, with bigger time frames. So it's all about, I've tested it. I started out with binary, so I really went down to like 1 minute. So I really gone down in the dirt, and I just grew time frames as I found out that was nothing for me. So it's about personality. It's about statistics, meaning I have found more profitability. And if I can just do one trade a year, kind of a fun little thing. But if I could do one trade a year and make 1,000 pips, and I'm good, instead of being break even for 6 months on scalping, which was kind of the story.
That's really true. And I think I like the way you answered that, because I was talking, kind of hardcore fundamentals, you're doing this, but you answered it with it's really personality driven. It's really what you have to be comfortable to do. At the end of the day, people like Chris and yourself and myself who have been doing this for years. Chris, you've been doing it for decades, right? You've been doing it for a while. In order to do it for the very long term, you really have to find something that is comfortable enough. It's not always going to be comfortable. It's not always going to be fun. It's not always going to be enjoyable. But if it's not bearable, you're not going to be able to employ that method long term and stick to it. So really well said. I do want to, Ivan, I'll let you go here. But before I do, let me just mention, for people who are listening, Ivan does a wonderful session within our group inside of the VIP Discord channel. He does coaching webinars throughout the week, answers people's questions, works with people. If you're looking for mentorship, if you're looking for one-on-ones, Ivan is your guy. You can send him a DM. If you are in the Discord, you should be able to find his username, send him a message, or you can find him on his YouTube channel. We'll drop his link here. And while we're at it, we'll drop Chris's link as well. If you guys would like to support these guys, please do that. Helps out with the show, these guys coming on, and we want to make sure we return the favor. So Ivan, thank you for coming on. Coach, we'll see you next time. And thank you again for coming on.
Thank you for having me.
See you, Ivan. And Chris, same thing. I'll let you go here, take over the stream for a little bit. I'm going to step out of the way, give you your platform so you get through things. If you'd like to share your screen, I don't think we can see it just yet. At least I can't see it on my end. You can take over. Cool. And enjoy the stream. Thank you very much for taking over.
All right. Thanks, Nick.
See ya.
Bye. All right, everybody. Let's dive in. So we're trading at 507. I just finished up a little YouTube session this morning, and I want to get positioned for a couple of things. So everyone can see my screen here. I want to chat about how I'm positioning for this week. I'm actually pretty well positioned for the SPY. We had some butterfly spreads. Somebody asked that about in my session earlier. What is a butterfly spread? It's just an options trade that basically says if price is close to within this range, then it has a pretty high reward to risk. It's typically an inexpensive way to trade. If you have a small account, you're trading options. Butterfly spreads are great ways to grow your account. There are pros and cons to everything options, which is the reason I like the market so much. I'll show you what it is. So I do have some trades running right now on the SPY. Let me show you here. Let's see. I have these trades. So March 1st expirations, I need to go to the SPY. There we go. So here are the expirations that I have on the SPY. We're trading at 507.91. You can see that I've got some open trades in. What this is, and I'll do that. So yeah, if you've got questions, you want to, yep. So Sarge was one asking me. I'm repeating that for the follower there. And then euro dollar, I'll take a look at that as well. We'll go through some currency pairs. So let's talk about this. So today, as we come into the market, this is, let me use different color here. This is the live price. Okay, we're trading at 508. All right. The way I'm positioned for this trade right here is I sold a 502 call, and then I bought a 499 and I bought a 505. So the way that this trade is constructed is if I get price, let me just use a better way to illustrate this. So here's my 502 and here's my 499 and here's my 505. If price comes into this window this week, this trade will be profitable. Okay. Now the good thing is if we've tapped out, these highs are on 510 and price starts to work its way back down to that level, that's fine. The optimum profit for this trade is by expiration. My expiration is end of day March 1st. So to get spot on perfect profits, it's the best case scenario. By 3:30 p.m. on Friday this week, it's going to be trading right around 502. The odds and probability of that happening are very slim. However, if I start to see, because I've had this trade on now for about 2 weeks, so if I start to see that price is gravitating back down towards this level, it's going to be close. Okay. Now, I will show you. I think I paid for the trade. Here's my tracker. I paid 32 cents for the trade. It's a 32-cent debit. Now, my max profit's about $2.70, $2.90. So it's like an 8-to-1, 9-to-1 reward to risk if I'm right. I know that 8-to-1, 9-to-1 max profit would be Friday by end of day. That's probably not how long I'm going to hold the trade. The way I look at this right now is if price starts to gravitate back into this level, then if I can get a 3-to-1, okay, or I can get a 4-to-1, I'll probably take profit because that will get rid of this trade here. I can lose on the put side. I can take profit here. Let's say it's a 4-to-1 and it's trading for, $1.20. If it's trading for $1.20, I take away the 32 cents that I paid for it. So I'm still up 90 cents. Okay. And then I also had a put butterfly spread, which I paid 27 cents for. So I can take a losing trade, a winning trade, not even have to wait to expiration and still walk away with about 50 to, I'm doing a terrible freehand here, but I can still walk away about 50 to 60 cents net profit. Now for me, that's going to be a couple $100. All right. So for me to take a small risk and not have to, be perfect on the trade and still walk away with a few $100, that's why I take these trades. It's a high reward, low risk, not the best probabilities, but I look at these planned moves and, I think that this is where the price can be this week. And this is where the price can be this week. So I think on the upside, I was looking at it this morning. I mean, I probably have to get something positioned this week, a little bit higher up just in case I'm wrong. Or I need to have something where if I did I look at a couple of debit spread scenarios where I can do a bull call spread. All that means is I would, buy a call over here and then I would sell a call a little bit higher. And if price goes up towards that sell call level, I max out my profit. On the put side, I've got lots of potential here because if we go lower, what I really should consider doing this week, and I'm curious what this is going to cost me. If I buy a put right now, let me clear this trade out. If I do the Friday expiration, let's say I buy a put at 510. So I'm going to buy the 510 put. If I then sell the 505, so I can pay $2.11. If price goes below 505 this week, you can see that my max loss would be the 210 that I pay. My max profit would be the remainder. So it'd be about $3, right? So if I'm confident that, we're not going to get above 510 this week, I can buy that put. I can probably sell something like that as well. If we get down below 507 by the end of the week, I can pay $1.45 to make $1.50, right? Or $1.55. So that's what I'm debating on right now is I want to make a couple of bucks. I'm just figuring out what's the best way to do it, right? So I'm either going to go kind of in the money with the put side. It's not that expensive to buy and sell. I'd give myself a $3 max profit. I'm paying, $1.43 for it. If I wanted to give myself more profit potential, take this down. Now I get $5 max profit. I pay $2. So I pay $2 to get $3. If I wanted to, if I'm thinking, I think we can go down to $500. Well, then I pay, $288 to make 10, right? So I mean, obviously the price has to behave and go down this week, and maybe this week's expiration is a little bit too greedy. Maybe I don't time it that well. Maybe the market needs to get through this week, which is a leap year on Thursday, to wrap up the month of February. and then get into Friday, right? So I don't want to be too cute and too specific on the expiration, because I do think that the markets have stretched quite a bit, and we're staring all these technicals in the face. And again, this like all these connected lines at the top you see here, this is an indicator that's built that connects price and momentum and overbought, oversold conditions. So if we are overbought, which we are, if we are divergent, which means price momentum are disagreeing, that's what this represents. So on the SPY, on the daily time frame, we have divergence with overbought conditions. On the Dow Jones, we have overbought with divergent conditions. On the Qs, we have overbought with divergent conditions. Now, I understand that I might not be perfect today or this week with a top forming, but I firmly believe that over the next maybe 30 days, and maybe this is what I talk about, right now, is maybe over the next 30 days, we do have a decent correction. And it's just a matter of how much am I willing to pay for that correction if I want to be long the option, or do I just take a very safe route, which is for the next 30 to 45 days, if all I did was did something out of the money and I just do a bear call spread here and I say, look, I don't think the market can get up another 5 to 10%. Well, we could certainly do that for a safer play. And that way time works in my favor. If the market goes sideways or struggles and then goes lower, that bear call spread is in full profit, right? So that'd be the easiest route, would be to take that bear call spread and just keep it out of the way. If you want to make a little bit more money, then you're looking at just doing a long put. But I typically don't just do that. I like to make it a little bit cheaper. So I do a lot of debit spreads like that. Anyway, that's all option stuff. And if you're not here to watch options, then fine, I'll accommodate some other requests. But as I get into the session, like, this is what I do. I mean, if you see my portfolio here, this is a stocks and options portfolio. I'm got a lot of stuff that I'm managing. I've got a lot of positions that I'm watching. So it's a lot when I'm going to positions here. What you're looking at right now, these are all the positions that I'm managing. So I spend a lot of time in my trading day, spot checking my positions. Do I need to make any adjustments? Checking to see where alerts are forming, or any highs and lows that are being tested. I try to be an option seller as much as possible when it comes to the indexes, like the SPY, the Qs, the DIA. I do a lot with just simply, shorter term stuff, because they are super liquid. They're also volatile. And if I'm going for short term gains, I mean, I typically keep my risk pretty small and just do a number of occurrences where, I try to make some profit, every couple of weeks. Okay. Let's see here. So euro dollar came up earlier, and then let's talk. Somebody's got some gold and silver in there. Euro dollar is 108.44. Let me look at this from the weekly time frame. Actually, I think the dollar index is a better gauge. So before I make a decision on euro dollar, I'm just going to look at the dollar index again, like I did this morning. So dollar index is trading at 103.84, and I zoomed in on this morning. So this is what I would say on the euro dollar. Watch the dollar index. Okay. So right now, if the dollar index, and let's say for this week, if the dollar index gets above 104.15, which is right here, if the dollar index gets above 104.15, I would look for that to be a breakout, and I look for dollar strength, because that'd be the DXY going up. Okay. If the dollar index breaks below this level, there's still this pocket that I think the market is falling back into. This yellow zone to me is still support around 102.80. But in the short term, if we get down to this level, the dollar could certainly drop a little bit lower. The euro dollar rallies. The pound dollar was a setup on A1 Edge Finder this week, right? I showed that this morning as well. Here is one of the top setups for the week. Your pound dollar is slotted at very bullish. I took a look at the pound Aussie. I took the trade this morning based on the Edge Finder. I am long at market on pound Aussie. CAD yen, we talked about it with Nick and Ivan this morning. So it's like the yen crosses, just don't trade against what you see. The yen at some point is going to change, and it's going to be a wild, radical race to rebalance. And I'm sure it's going to be just this crazy talked about Forex trade. But right now, there's very little incentive to strengthen the yen outside of a one-off, spike correction. Is it intervention? I mean, that's the hard part, is think about this. Like, if you want yen strength, you're essentially trading intervention. That's the hard part, right? We're not seeing the Japanese bonds change in price much. We're not seeing that the BOJ is changing monetary policy much. Therefore, I mean, what are you actually trading? Like, the yens aren't behaving technically. if they were behaving technically, they wouldn't have a 9-month trend in 2022. That's all of a sudden creating this carry environment. They wouldn't have bottomed out in early 2023 and then been weak again the entire time. So point is, I take a lot of the yen pairs with a short-term focus, and I think right now you're better suited to just trade against the yen for the foreseeable future until the structure is so obvious, until there's a clear shift in monetary policy where we're seeing just like without a shadow of a doubt that the JPY is getting stronger. So the top trades that I like, I did take the pound Aussie long. I'm looking for the pound dollar, and I just dove a little bit deeper into that trade because I think the dollar index is going to be a major influence on that. Therefore, I think that the pound dollar, same thing on euro dollar. If the dollar index breaks above this level, I'm actually looking to do a short-term sell on the pound dollar. If the dollar index breaks below this level, I'll follow that pound dollar edge finder trade, and I will go long pound dollar, and I'll probably try to go up to pound dollar. For me, I think we can get to 130, 1.30. I think we could hit also the bottom of my range that I have in the pound dollar, which I think is on this chart as well, this workspace. Give me a second. Yeah, so if we end up breaking this trend line for pound dollar, so we break the trend line for dollar strength, I would look to retest this low. If we continue to go higher, we are in an uptrend right now, and that uptrend gets up to the highs around 128. I think we break above this box, just measure it. We have this range, we have this range, right? So to the upside, we can get to 130. To the downside, we get to 125 or 124.50. I just think it's again, it's noisy, right? So if we have noise, this is what I have to assess. Measure the box, and we're looking at, so let me just measure in pips. So we're looking at about a 180, 190 pip rate level. So we break above, go 190, there's your 1.30 on the upside. If we break and go to the downside, there's your that's 2,400. So that's the play. I just think that in order just to, instead of calling it right now, I think just keep a slightly closer eye on the dollar index, because that would give us a little bit more confirmation to go in and hopefully see some momentum behind that trade. Fair? Okay. Let's see here. Yen intervention up. I mean, again, that conversation's someone's asking about yen intervention. That conversation's been on the table for the last year. If, when. I mean, one thing I'm watching is Japanese 10-year. Japanese 10-year on the daily chart hasn't really done much. And this does not correlate with what the yen has done. I mean, in here, for example, when this move happened, when we had a breakout, that was super weak on the yen. And then we saw a little bit of strength in the yen. It was November, December, January from 2022 to 2023. As soon as we had a bottom in January 2023, bond price rallied again, and we've seen an excessively weak yen, but not to the point of making highs all over again. So I think the correlation is a little bit broken. We're kind of back into like this weird area where it's no longer the 0.25 manipulated price. I don't really know what to glean from this outside of, you just have to watch the yen pairs individually. The one nice thing, and I've seen this for years, is when the yen is cooperating from the technical side, the whole basket does it. So I will say this: when the yen is ready to move, you're going to see that the dollar yen is probably going to drop like crazy, right? Here's the one reason I'm also not fighting the yen right now. This is a perfect ascending wedge where, just like I talked about, if this breaks the highs at 152, we're not stopping. Like, we'll go to 152 and then we'll go to 153, 154, 155. I mean, we could have a round number this year at like 160. And it could be a very painful trade where all of a sudden all these retail traders getting stopped out, stopped out, stopped out. Market goes up several hundred pips more. But here's the pattern that I would see. If we put in a top, right? Let's say that we blow through these highs a few hundred pips. If we all of a sudden start to unravel from there and put in a big topping pattern, that to me is where there's plenty of opportunity to see intervention, to see bearish setups, to see bearish confirmation alignments. There's plenty of opportunity, and there's going to be thousands of pips up for grabs. So I just don't think we need to be in a hurry to pinpoint or pick the top on these yen crosses, because right now I don't see the yen's forming tops. I see the yen just getting weaker. I see the yen pushing higher. I think that if you go to your commitment to traders, I mean, look and see where the smart money, the smart and dumb money, right? I mean, look and see where those are going. If you go to retail positioning and you look at these yen pairs, I mean, if you're looking at retail positioning, primarily short dollar yen, it's probably going higher, right? I mean, you have to think about that. That's what happens. Like, there's going to be painful periods in Forex where if heavy retail positioning is short dollar yen, and if there are other pairs on here, I'm sure like most positioning on the yen crosses are going to show shorts. And I can find that here with another. Let me go MyFX book. I'm just going to go into retail sentiment. Where are we at here? Sentiment. Get out of here. Okay, so if I just focus on the yen crosses, retail positioning is heavy short. Pound yen, heavy short. Okay, euro yen, heavy short. Look at that. Euro yen is 91% short for the retail community. Aussie yen, 91 to 9, heavy short. CAD yen, 85 to 15. Was that right? 84 to 16, rather. Sorry. See what I'm saying? Like, it's almost unanimous that most of the retail crowd is short yen pairs, meaning dollar yen they want to sell, euro yen they want to sell. I mean, you can see it right here. 73 short to 27 long. That's the retail side. So smart money is not short. And so if you want intervention, how are you going to time that? You know, nobody has a speed dial notification or a text message coming from the Bank of Japan to say, guess what? Here's when we're going to do it. Nobody knows. So why are we guessing? You know, just trade what you see. And right now, as we get into a seasonal period where the markets like to trend, that's another reason for the markets to push even higher because it's the trend season. It pushes up, maybe forms these capitulation moves where the yen does get weaker until we start to see a top. And I just think that's what I'm not trying to call, is I'm not trying to call the top. So it just keeps going higher. You can take a look at the entire basket, right? Aussie yen is at these highs. You know, everyone's like, oh, they're short, they're short. Well, it's just going to be painful, right? If you don't get confirmation to sell on the right-hand side of the trend line, you've got no confirmation to sell it. So if it goes a little bit higher, all it is just blowing off the tops a little bit. If we have a rising wedge, fine. But the rising wedge, it looks great. The best way to trade it is confirmation once the bears take over, but they're not. That's the thing, is the bears aren't taking over yet. Okay, so all I'm saying is, and this is what I'm doing personally, I'm trading a full auto robot on yen crosses. It's called Hypertrend. I just launched it last week, and I have it running on 25 currency pairs. The yens are included with full auto. What I'm doing is I'm trading what I see, and I'm also trading yen pairs smaller. I think that they will be volatile. If they go up a little bit and then they crash like crazy, I want to make sure that my robot is positioned for that. I want to make sure my trade size is positioned for that. So if I took a mini lot at 0.10, I can go into a 0.15, a 0.20. I can start small and kind of build my way in once I get more confirmation stacking up. Right? Yeah. So that's the yen stuff. Somebody came in with oil. Oil, I still like oil, bullish. Okay, for right now, we've got a pretty strong channel on oil to the upside. So I'm still buying the dips. I mean, we talked about buying oil on the right-hand side of the trend line at 72 and change. Had a nice little rally, came back to test the same levels again. I think oil looks pretty good to the upside. You know, are we going to see oil have this really slow, methodical channel all the way to 85 or 90? I don't know if the channel is going to cooperate that well, but I will say that I don't see oil, you know, really getting too much lower than 67 or 64. So if I'm just buying some oil here, buying some oil here, buying some oil here, I think this support level holds really nicely. And then we do get back to 90 plus. I think we get to $85, $90, and that's some good upside potential for oil bulls. So I think that the direction looks pretty solid. The structure looks pretty solid. All this support has been holding nicely. I'm in favor of oil going to the upside right now. Dollar index, again, watch the dollar index closely. Gold and silver, got to watch the dollar index as well. So we'll see how that plays out this week. If you don't mind, I'd like to spend a little bit more time on getting some trades in on the SPY. So we're trading at 508. I think what I'm going to look at doing here for the SPY is I think I'm going to go out for the next couple of weeks. So we have a big monthly expiration on the 15th. Okay, we're trading at 508. I want to see how this positions. All right. So if I look at this particular account right here, and I can take a one contract trade. I've got some buying power, which is fine. This account are fine. Those other ones will be landing this week. If I looked at an at the money, so if I buy an at the money call and to the upside, and this is going out to March 15th. What I don't have, let me see if I can get something on this open interest stuff. So if I go out to the 15th, that's 18 days out. And this is an open interest. All this means is this is where there's a lot of expirations and strike prices. So if I go out to the expiration on March 15th, these levels are sprinkled in. Now, what's interesting is there's a lot of put open interest in red, and there's call open interest in this little green. So I don't see a lot. If I zoom in here, you notice that we don't see a lot higher than current prices. I mean, I would not be surprised to see that the market is anticipating a lot of movement into this like 500 back to 480 space. And it gets ridiculous, all the way down into the four. This is all put interest, but I don't think the market's going to drop 100 points in 15 to 18 days. I don't think that. But I do think that if we carve out some tops, we start drifting lower. 500 to 480 could make some sense if we have a bit of a correction phase. So I think what I'm looking to do here is maybe on the call side, I just only focus on some butterflies. But on the put side, I feel like if I went out a couple weeks, if I buy a 510 or 515, let me see what I can do here. If I buy a 510 or 515, so if I buy the 515 and let's say I sell the 500, so I'm essentially buying an in the money put at 515, which I'm going to pay for. I'm going out a couple of weeks. I'm going to pay for this. So it's almost $10. But if I sell this $500 put against it, it lowers the cost basis for me where I could pay $7. I don't know if you can see this very well with my color here, but if I pay $7 for this debit, but I've given myself $15 of potential profit, all I need price to do by the 15th of March is be below $500. So if I'm confident in that direction, and we're trading right in the middle right now, so you can see it's about a 50-50 probability. There's a 49% POP. But the nice thing is I'm putting reward in my favor by a little bit. I can pay $7, just under $7, to make 15, but because of what I pay for it, I'm going to walk away with about $800 profit. Now, is that a great trade? I can increase the probabilities a lot by doing this. If I wanted to say, how about right now on the 15th, I say we're going to go, current price is 508. I'll say that if we're above 505 and we get to 515, I can get $10 of upside here for a $5 debit. I'm happy with that. I kind of go a little bit more in the money on the put side. Okay. So would I be willing to do that? My max loss is $500 for a profit of $500. It's a, kind of a 50-50 shot, but it's a 1-to-1 reward to risk. I think that trade's fine. That means if we have more melt up potential for the next couple weeks, then sure, I make $10 a credit. I paid $496. I walk away with $500 profit on one contract. So that's not a bad trade. If I try to get over to this side, let me delete this one. I'll do the same thing here. We're at 508. If I did like the 510 and I buy a put at 510, I go down to 500. Okay. Now that's a max $10 profit. This is a max $10 profit. Now, what's interesting is for the put side, I actually have around 4 to make 10. So I have about $6 of upside here, and I have about $5 of upside here. So you can see that I would be paying $878 for that trade, and I can make a max of around 10. So it increases probability a little bit, 70% probability to profit that, one direction here is going to be right. I'm vulnerable on the trade, by the way. If price stays in the middle, that's my max loss. So this is one thing that's always kind of nice about options. If anybody's interested in learning how to trade this stuff, there's always a trade-off. There's always a pros and cons, right? So I look at probability. I look at my risk and reward. Do I love this trade? There's probably better ways to trade it, right? If I want to do something like this, I could probably just do credit spreads instead. Make this a little bit easier on myself. If I want to do something really cost effective, I could say, you know what, by March 15th, I don't think we're going to be above 525. I could do that. So how about this? I'm going to do a 525. If I sell the 525, I could collect, it's a whopping 10 cents on a dollar risk. I can get 18 cents there. I don't mind this trade. Okay. Now here's the trade-off. It's a super high probability of profit, right? 85% probability of profit. That price will not go above 525 by March 15th. So that's an easy way for me to collect some income. Now, the problem with this trade is I'm risking, $90 to make 9. That's not that great. But the reason I'm risking so much to make so little is because my probability is so high that I actually get paid on the trade. Okay? Now, if I wanted to take more income, I could do a couple of things. I could increase this where now I do a $5 spread and I collect 34 cents. Okay, but I'm still risking a lot. I think I'll just do this. I like this trade. I'm willing to take my 9 cents credit if it will fill me. If I went down one strike like that, I can get 11 cents. Maybe that's what I end up doing. That still increases my probability of profits 83%. What I'll do here is probably take a 10 contract trade. So if I'm correct on this trade, I make $100, $110. My risk is $8.90. I know that's a backwards reward to risk, but I think that's a probability that I'm comfortable with. Right, to get to 524 on the chart, 524 on the SPY. 524 on the SPY after this week's earnings, going into a new month of March for trading. With all the technicals that I see, I'm also trying not to be super precise on time. 525 from current price, we would need to get to. We'd have to have like another 3% move on the broader market, right? We'd have to have another 3.25% to the upside. Now, yes, we know that that market's very capable of making that rip to the upside. We know that. But in the event that we stall, in the event that we struggle, that trade's pretty straightforward. Okay. Bitcoin shooting up, New Zealand dollar. Okay. Bitcoin is shooting up. Awesome. Good. I'm fine with that. I mean, I've got BTC, I've got MARA, I've got I sold my GBTC this week. That's going up, but I'm also in MARA, which is shooting up as well. I'm in BITO, which is shooting up as well. So my exposure is doing just fine. So yeah, Bitcoin is rising, which I'm totally fine with. The levels I'm watching on Bitcoin, as probably most traders are right now, will it cross 68,000 again and make all-time highs? It's very possible this year. Is 100K in the cards for this year? That's also very possible this year. With the ETFs approved and the inflows going into, BlackRock and Fidelity with these Bitcoin ETFs, it's not really a surprise. Again, it's speculation. Is there a real value to it? I mean, there's arguments on the pros and cons of Bitcoin, but as a trader, to me, I like the asymmetry. That's why I've been long on Bitcoin since day one. I mean, it's like, look, I can risk $1,000 to make 10 times that. I can risk $1,000 to make 20 times that. If we hold this long enough in the spot price of Bitcoin after a halvening and after whatever else happens, I mean, could Bitcoin spot exchange ever be $500,000 or $1 million? Maybe, possibly. So that's the crazy stuff. It's like I trade that. Am I a maximalist? No, but I'm willing to take the trade. I'm willing to have that risk capital. New Zealand dollar. New Zealand dollar, again, I just go back. How about this? Anything that's dollar related, I'm not going to take a trade on the dollar pairs until I have confirmation on my dollar index right here. Right? If the dollar breaks higher or lower, then I'll start looking for those alignments. Then I'll look at the Kiwi dollar. Then I'll look at the euro dollar, and I'll take those trades according to what my dollar index is doing. All right. I think right now we're just a little bit too early where we're taking trades on New Zealand dollar, euro dollar, pound dollar. I just don't think the setups are getting momentum behind it because I'm not really sure what the index is doing. Same thing in the Aussie dollar. Exactly. If I don't have the DXY giving me a high or low, I'm going to hold off on the dollar pairs for right now. I mean, give it a day, give it a couple of days. We have enough U.S. news this week, especially on Thursday, Friday. We get into a new month of trading as we close out February, get into March. The trends are happening. I mean, if you're new to Forex trading, I've seen this for years. It's such a good time to be trading. If you want to trade what you see, March, April, May, trade what you see. And that does include the willingness to take losses. If you trade what you see and all of a sudden that's invalidated, close out the trade, don't fight it, be willing to see a new trade. If I put a stop loss in, it gets stopped out, and all of a sudden my buy zone becomes a sell zone, I've got to stop myself out, recognize that the sell zone's confirmed, be willing to take a sell trade. So start small, give yourself a couple of trades. I mean, if I get a 0.10 for $1 and I lose, I'm okay going to a 0.15 or 0.20 and increase my trade size a little bit, go after the trend, trade what I see, and have that thing take off to the upside or to the downside. Just trade what you see the next few months, and I think your trader self will thank you for it, because you're not stressing yourself out, right? What do I see? It's a buy zone, so buy it. What do I see? It's a sell zone, so sell it. Don't make it complicated. March, April, May, trending season. Pre-summer push. You've heard the phrase maybe in stocks, sell and may go away. Well, what's interesting is these trends that start to happen in the markets, they trend through March and April and May, good or bad, right? Risk on, risk off. I don't know. Doesn't really matter. But when we have these trends, those trends oftentimes can be strong enough that they get into May and then they drift into June and drift into July. And so we might start seeing trends that start now and last for the next 3 to 5 months. So that is why I say it's not worth fighting it, especially if these big volume orders come in, if retail crowds getting, pushed into more pain, which would be yen crosses, for example. So I just think trade what you see. This is why the DXY is what I'm watching to make sure that I'm not getting in too early. Okay. All right. All right. So the bear call spread thing, that's fine. That's short term. Maybe this. Let me see what it cost me if I went out to the 15th, 22nd, 28th. Let me see what this cost me. If I go out for the next month, this is going to be expensive, but if I'm at the 508, if I did a 505 call and a 510, oops, let me switch this there. So I could get $5 max profit to pay 283. Probability of profit's 52%. But I am confident that over the course of the next 31 days, I don't think we're going to stay right in the middle of this. So am I willing to take this trade? Sure. If I take this trade, my max risk here, I could see that trade coming together. Same thing is true. So if I paid, 284 to make 215, I'm okay with that trade. And on the flip side of that, let me clear this for a second. So I think that's one thing to consider. I'm going to write that down. So maybe a 505 by 510. That way I tighten it up. I have a pretty decent probability of profit there. By 510, that's a bull call. And then on the bear put side, if I flip this around 28th, if I did a 510 by a 505, 226, it's actually cheaper on the put side. So let's see here. The problem with that is I would do the 510 by 505. That's 225. That's a bear put. So that's 225. And if I did the 505 by 510, that's 283. All right. So if I take the debits here, this is what I need to consider. If I add both trades in, this is where it kind of sucks. If I did the 510 here and sell that, I actually pay more than what the max profit is. So that trade's not going to work, right? So what I'd have to consider here is if I did a 510, I'd have to do like a 500. And if I did a 505, oops, I switched it. Sorry, I did that backwards. If I did the 505, I'd have to do the 515. Okay, if I did the 510, I'd have to do the 505. There. Actually, no, that's incorrect. I did do it right. All right. Anyway, this gives me $15 of max profit, I'm sorry, $10 of max profit, paying $725. Maybe I tightened that up a little bit. Sorry. I'm just gonna do this one more time. So do the 505 by 515. Oh, I did it here. Yeah, that's correct. I was right. So if I bump this up to 515, now for a $10 upside, I'm going to pay $5. For a 510 to 500, Oh my gosh, man. So I have a 77% chance of profit, but I'm paying, $8.60 to make $1.40 max profit. This is, again, I do this a lot where it's like options sometimes drives me crazy where I'm like, I want high probability, but man, sometimes you just can't get the reward to risk that you want for a high probability. So I'm a little torn right now with what I want to do in the near term. I think what I have to do this week right now is just follow along, and I've got some March 1st expirations on the SPYs, on the Qs. I'll be watching these levels very closely. What I'll probably have to position for is just on the safe side if the market decides to go higher this week. So we're trading at 508. If we decide to go higher this week, I probably need to have something in there. Okay. So I don't want it to cost a lot. I think a butterfly spread is probably the best way to do it. If I did a 515 and I do a 512 and a 518, and then I increase this to -2. Oops, that's not what I wanted. Increase that to a -2. So this would be a 33-cent butterfly spread. So I'd have to sell the 2 options. It's the 515 calls. I'd sell 2 of those, and then I do $3 wings. It cost me 33 cents. Now the nice thing is, if you can see my numbers here, I've got 33 cents here, and I've got 267. That's almost, let's say 270. You can do the math on that. It's almost a 9-to-1, right? So if by Friday price is up here into this window, if it's close to 514, 15, 16, I've got a pretty good payout that doesn't cost me a lot of money. So for me, if I do this with, let's just say I do 3 contracts. So that's a 2 contract trade, and I get all these to increase. So let me see here. Increase that. That would be a 2. I have to increase this to 4 to 2 to 2. It's just gonna be easier if I set it up with a butterfly spread. So this would be a call butterfly go there. So if I sell the 515, do the 518 by 512, that's $3 wings. Pay 33 or 34 cents for it. Now if I increase the contract size, yeah, I'm going to risk $100 on the trade to make potentially, $800. That would be, end of day Friday. We're trading at 514, 515, 516. That's my max profit. If I want to evaluate this trade and show you what this looks like, if I go to a curve, this is where my max profit is right there. So this should be much bigger than what it is. I can build this trade a little bit differently. Anyway, this is what I'm debating on for this Friday, just in case, because the reason I'm thinking about this trade is if I don't have this covered, right? If price goes down, I'm getting paid this week. If price falls from current price to this level, I'm getting paid. I'm getting paid a lot, like 7, 8 to 1, 9 to 1. This should be pretty good by the next, couple of days. This should be like 3, 4 to 1. If price goes crazy lower, I'm getting paid a lot there as well. I don't think this is a probability. This one's way closer to price. I closed out my Qs for break even today, so I'm waiting. But I think on the upside, if we just melt up and drift up a little bit higher as we wrap up February, I do want to give myself an opportunity to at least make some money here. So I like the reward to risk. I'm willing to risk $100 to get the payout if price drifts higher into the zone. I guess the only issue that's not justifying the trade is I don't have any open interest to these levels. I mean, there's nothing that I see for the expirations this week. And again, if this is, if this is not entertaining to you, then let me know. I can happily mix this up. But I've got a lot of traders in the room that are trading at options with me. We run a trading room called Equities on Demand, and this is stuff that we do every day. So what I see on open interest for March 1st, and let's zoom in here. Okay. I have a 512 and I have a 514. Okay. So we do have those levels. Now, does that cap the upside? Not necessarily. I mean, I can evaluate that trade as well. So if we get to 512, let me move this down. I do a 509 by 512 by 515. You can see now, you know, I'm going to have to pay 50 cents for it, which means if let's just do a one contract. So if I do a standard butterfly spread here, I pay 47 cents. I still get about a 6-to-1 reward to risk. That's about a 5-to-1 actually. So if price does come up into those open interest levels, you know, it has to be by Friday. If it's in Friday, then yes, that's a 4-to-1, you know, 5-to-1. That's good. Okay. But if I want to make it a little bit cheaper with higher payoff, that's why I would bump these up. Go to 515, you know, do the $3 legs that way. It's pretty inexpensive. You know, I can risk 30 cents to make $2.70. I kind of like the trade, you know. And also, if I take this trade here and I lose, but I take this trade and I win, this trade could pay for this loss as well as pay for this loss and still make me money as a net result. That's the beautiful thing about these trades is with a high reward to risk, you have to win like 1 out of 5, 1 out of 6, 1 out of 7 to actually be positive. So if you just think about that as a trader, that's the name of the game. You know, I mean, if I took 10 trades and I can win 1 or 2 of them and still make money, that's pretty darn good. And I know that's hard to wrap your head around because I like to trade and win as much as possible. That's always what I'm trying to do. But in options, it's about efficiency and probability, you know, and I don't want to risk more than I necessarily have to. And you can see that I haven't placed a single trade. I've been sitting here talking for an hour and haven't placed a single trade because when it comes to the short-term stuff, you're just like you're playing chess with the market and there's all these different varieties and variables you have to consider. So I think I like this trade enough that I would take it. Do I want to go, you know, and spend 30 cents on it? Well, the probability is low. It's an 18% probability of profit. The upside is great, you know, so like 8-to-1, 9-to-1. If by Friday we're coming into this 514, 515 zone, I think I like this more than paying for debit spreads right now because I'm seeing the efficiencies of like if I buy a put and then I sell a put for a debit spread, you know, it's fine. But if I pair that with a debit spread on the call side, it's basically a wash. So that's the hard part is I'm just not getting the type of payout that I want. So anyway, here's what I'm probably going to do. What I'm going to spend all day doing today is reviewing positions. Do I want to do anything short term on the indexes? If I do, probably the SPY is the way to go. I have some other positions I need to consider here. So, you know, the account's up $200 today, which is fine. A lot of these are just out of the money credit spreads. This looking for, you know, Walmart's trading at 59. I have what is this? A bear call spread. Did that get switched? That's strange. Did something just happen on Walmart with like a dividend or a split? We had a 3-to-1 split for Walmart. I see. Because Walmart was trading at like 135, 140. I mean, it's a 3-to-1 split, so it's trading way up here at like 170, 180, right? That'd be your 3-to-1 split. So anyway, that adjusts my option trade, and now I have a 63. That's a weird strike, but I have a 63.33 by 65. Now it's in profit. If I need to make an adjustment to it, I can. But anyway, this is the fun stuff, right? This is where I got to get into the trenches and figure out, is this the best place for me to be for some of my trades this week? All right, let me do this. Any other commentary? I'm going to spend the rest of my morning just reviewing. I will likely place trades in my Telegram group for Equities on Demand and Delta Trader. If I find something I like, we'll take the trade. More than likely, it's probably filling in the gaps on some of these SPY trades in case price goes up a little bit higher this week. If I just take a look at the chart, and this is why I still think on the technical side, the market's likely gonna stall a little bit. But I don't know, right? I mean, we could hit the highs, we could pull back a little bit, and this is another spot where the market can rally. This was the market hit highs and pulled back a little bit prior to NVIDIA with the earnings last week on Wednesday. We could do the same thing where the market dips a little bit here, finds this past resistance becoming support, and then the market works its way back up to all-time highs again. Here, just like I said in the yen crosses, okay? Let's keep this really simple. If I'm truly going to get the direction for the bears on these indexes, we need to be on the right-hand side of the trend line. That's where the momentum is going to be for the bears. Right now, this is push and pause, right? And if that pause looks like a pullback, that pullback could bounce here, that pullback could bounce here, but we don't have to break the trend line. I think the market is going to be as aggressively bullish and as melty uppy as it can be until the Fed gets its first rate cut in May or June. I think that's ultimately, and I know this is kind of counterintuitive, but I think when the market actually sees the Fed cutting rates for the first time, that we're going to probably have a top put in some way, shape, or form. You know, how dramatic and how bearish does the top get? I don't know, right? But the real question is, how much bullish can we go? And we're trading at all-time highs, and this is why I just don't think it's worth fighting, right? Once we cleared the 2023 highs, once we cleared all-time highs, we are now, it's a bull market all over again. And so I just don't think it's in our best interest to fight it, to call the top, to be crazy one direction. I just try to, carve out some good trades, probabilities, make a few bucks, keep doing it. It's just number of occurrences. Okay. So for the session, I know I was kind of talking all over the place with what I want to do. I didn't make a decision on anything with the indexes. I think the dollar index, I've got to make a decision based on confirmation. So for me this week, I'm kind of waiting. And I think some chart alarms would help my decision making. Same thing on the Edge Finder. I mean, taking a look at our top setups for Edge Finder. I looked at both of these. I did take, so the top setup for the week, or top setup right now, I'm already in this one right here. So I did take the pound Aussie this morning. So I do like that trade. I'm already long in the pound New Zealand. I think those will behave in a similar fashion. Pound dollar, that was DXY's needing to give me some confirmation. CAD yen, just stay with your alignments. The good thing on CAD yen is the alignments you're in Edge Finder, you can take a buy trade with a very tight stop loss and go after, 2-to-1 or better. I don't think that's gonna be a problem at all, because right now everything is aligned bullish. You got a top setup. You look at your technicals. You look at your moving averages. Everything's bullish, right? Pound dollar, it's in a noisy spot because the DXY is a noisy spot. Pound dollar or pound Aussie, I've been looking for a swing trade, and we're getting it. So I put in a trade where I took a market order and then a pullback. I'm looking for a second order, so I'll show that trade really quickly before I go. And Chandler, if you're standing there waiting for me to get off, I'll be done in just a minute. SPY closing green today or pullback. I mean, can't you say that every day? It's going to close red or it's going to close green today. Yep. You are probably 100% right on that. Anyway, and again, it's a toss up. Let's go pound Aussie. Pound Aussie, I took a buy trade this morning around 93.80. It's already up 20 pips or so, which is fine. I looked at this two ways. Is it going this way, where we have a high, low, lower, high, lower, low, but this postured move, this is why I'm overall still bullish on the pound Aussie. I love the fact that the Edge Finder called this trade out. I like this area to be long, so I did a buy trade here, a buy trade here. My stop loss is down below these levels. So that's my swing trade. Now, obviously, if trade 2 doesn't get filled, and we're talking about this, by Wednesday or Friday, and we're back up here to the highs, well, I'm going to eliminate the entry order 2 and just move my stop loss to break even or better, take some profit there, or just let it run. Because I think the swing that we're looking at is, let's see if we can get up to a 18127 or get to a 618 and retest this high, and that's my bullish trade. So pound Aussie, Edge Finder called it top weekly pick or top pick. I think it's great. And if we pull back a little bit, I'm waiting for a little bit more because I'll buy in again and I'll just take a bigger swing trade. But I do like the direction. Otherwise, waiting on the DXY, watching the indexes closely. Okay, I think 510, might be a tough call this week to get above it. We certainly paused there on Friday. There could be some heavy profit taking. The market's been off to a pretty good start this year. I could just see us pulling back into this spot. We pull back into, the NVIDIA. I guess we pull back in the NVIDIA pocket. Maybe that's not a bad play, But the issue here is like, okay, so we go back to the NVIDIA pocket. What is it going to cost me? If I did a 508 put right now, and I wanted to get this, that pocket's at 503 or that's 498. Let me see what it costs me, because maybe I take the trade. If I look at trade, look at the 8th, look at the SPY. So the first, if I bought a put at 508, it's going to cost me $2.88 to get back to this pocket, which is around 503. That pays me $5. That's not bad. That's not bad. So I could clear this trade out. I could buy the 508 for 280. The intrinsic value in the option, if we get to 503 to touch that NVIDIA gap, that would pay me $2.20. So do I think it's fair to see we can come back and hit 503 this week? Sure. You can see that's the lower end of this expected move, right? Expected move at 502, 503, on the upside 512, 513. Average weekly move has been about $7, based on the current implied volatility, we're looking at about a $5 move this week. So the good and the bad. The good is if I get to 503, I make money. The bad is if it goes up, I start to lose value. If I sell against this, I got to wait for expiration. So again, clearly I'm just not liking any trades this morning. I think I'm better off just looking for something safe, probably staying out of the money, do something like, I'll probably just do something like this. Bull put spread instead. Go out a couple of weeks, do something like credit spreads and just keep it really simple. Let time work in my favor. And just, this is what's going to drive me crazy. If I try to time this perfectly, it's going to be tough. And most of the time, options expire worthless. So as a seller of options, you make a lot more money. You have a higher probability of profit. And typically the way I trade is define risk. So anyway, all right. I think we went a little bit long today. I appreciate everybody being here. I know it's been posted in the chat. My channel is youtube.com/Chris Pulver. If you come into any of my live sessions or even here as well, I do have a Discord I can share. If anybody wants to join my Discord, I'm happy to share that. So free group chat for everyone. This is, I'll edit the link so it doesn't expire. So let's do generate link here. Copy that. And then this is Chris's Discord free group chat. So if you'd like to join that, all are welcome. When I go live on YouTube, I post a weekly blog. Anything I post on Twitter, any analysis, education, private instruction, coaching, stuff like that. Also affiliate links. You can, save some money on the Edge Finder. I've got that promo link along with some other softwares and services that I use to help me trade. And then I also post top weekly picks. Perfect. All right. Thanks, Nick. Thanks, Chandler. All right, everybody. Happy Monday. Looking forward to the week ahead. Let's make some pips. Let's make some bucks. And we'll see you soon. All right. Thanks. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.